Today, we're diving deep into Woodward's Q4 2025 earnings, and what a story it is. The headline really says it all. Their aerospace division helped them soar to a record year. Let's kick things off with this powerful statement from the top. Chip Blinkenship, the chairman and CEO, is basically laying out the entire playbook for us. Record sales, booming demand, and sharp execution. This really sets the stage for everything we're about to unpack. Investors, hello. This is Stock AI Insights earnings analysis, and I'm your chief AI analyst. Now, before we get into the numbers, just the usual quick reminder. This is all for educational reference. It is not investment advice, and investing, of course, always involves risk. Okay, with that out of the way, let's get right to it. We're parsing Woodward's Q4 and full year 2025 earnings, which they released on November 24th. And honestly, the story here really is a tale of two segments, with one of them just truly taking flight. So first up, let's dissect that revenue engine and get to the bottom of this tale of two segments. Let's start with the big top-line number. For Q4, net sales hit $995 million. I mean, that's a 16% jump year over year. A really, really strong way to close out their fiscal year. So where did that growth actually come from? Well, check this out. The aerospace segment was an absolute beast, adding $108 million all on its own. Now, core industrial also chipped in a healthy $41 million, which is great, but it was really aerospace that completely powered through and more than covered the small $9 million dip from the China on-highway truck market. So, to put it simply, Woodward's aerospace segment is just firing on all cylinders. It's kind of like a powerful jet engine that's literally lifting the whole company's results up with it. And hey, don't just take my word for it. Listen to what the CFO, Bill Lacey, said on the earnings call. He pointed out that aerospace sales hit $661 million. That's up a staggering 20%. And get this, commercial services sales jumped 40%, while defense OEM sales climbed 27%. Those are just incredible numbers across the board. Okay, so sales were fantastic, but the big question is always, right? Did that translate to the bottom line? So let's take a look at the profitability picture. And the answer is a resounding yes. Adjusted earnings per share for Q4 clocked in at $2.09. That's a 48% jump from last year, almost a 50% increase in earnings. That tells you they're operating incredibly well. So how in the world did they pull that off? A big piece of the puzzle is right here. Look at the aerospace segment's margin. It expanded by 520 basis points. For those keeping score at home, that's a massive 5.2 percentage points, bringing their margin to 24.4%. The industrial segment saw some nice growth too, but it was that huge expansion in aerospace that really supercharged their profits. And the company was pretty upfront about how they did it. It came down to two key things: strong price realization, meaning they were getting better prices, and just plain higher sales volume. And can you guess which segment was leading the charge on both fronts? Yep, aerospace again. All right, let's switch gears for a second and talk about where Woodward is putting its money to work. For the entire fiscal year, their capital expenditures, or Capex, totaled $131 million. And this is so important because it gives us a real insight into their strategy. See, this isn't just random spending, it's a direct investment in their future. They're pouring that money into more automation and a brand new, super high-tech aerospace facility down in Spartanburg, South Carolina. They're clearly getting ready for even more growth. So that's where they've been. Now, where are they going? Let's check out their flight plan for fiscal 2026. This side-by-side really says it all. In 2025, they grew sales by 7%. For 2026, they're guiding for an acceleration, somewhere between 7 and 12% growth. Now look at earnings. After hitting $6.89, they're aiming for $7.50 to $8 next year. The takeaway is pretty clear. They don't think this momentum is slowing down. They actually think it's picking up. Let's break down those 2026 targets a bit more. Notice that aerospace is again expected to lead the pack, with sales projected to grow 9 to 15%. But here's the real kicker. Look at capital expenditures. Remember that $131 million? Well, they plan to more than double that to around $290 million. That's a huge signal that they are going all in on those growth investments. So what's the final verdict here? Woodward closed a record year with its aerospace division providing some serious lift, and honestly, their guidance suggests they're plotting a course for an even higher cruising altitude in 2026. This all leaves us with one big question, though. With these huge investments in automation and new facilities set to double, can Woodward keep up this incredible margin expansion as it gets bigger? Or will the cost of that growth start to weigh on profits? It's definitely the key thing to watch going forward. What do you think? Drop your thoughts in the comments. I'll see you on the next one.